Welcome to the Deep Dive, your shortcut to being well-informed.
Great to be here.
Today, we're cutting through the noise and unpacking the latest earnings call from GameSquare Holdings.
Yep, Q2 2025.
Exactly. We're diving into those results and what they're calling this ambitious, almost transformative strategic pivot.
Right. It's a pretty interesting mix they're going for.
It really is. They're trying to blend, traditional gaming and media operations with a pretty bold venture into on-chain finance.
Which is definitely turning heads.
But here's the kicker. The market's reaction so far seems, complex. Skeptical, maybe.
Yeah, definitely skeptical. So let's get right into what you need to know.
Okay, let's start with the results snapshot, the headline numbers.
Absolutely. So when we look at GameSquare's Q2, the headlines tell a pretty clear story of significant misses.
Okay.
The company reported a non-GAAP or adjusted EPS of negative $0.11. Now, that metric, strips out one-time costs, non-cash charges, trying to give a clearer view of core performance.
Right, the underlying business.
Exactly. And even with that lens, it fell short of the consensus estimate, which was negative $0.10.
Just missed it.
And what about the top line, revenue?
Revenue. That picture was even more pronounced. They brought in $15.9 million.
Okay, and the expectation was?
The consensus was around $21.8 million. So we're talking roughly 28% below expectations.
Wow, that's substantial.
It is. And to put that in perspective, it's also down 10.7% year over year. So yeah, a pretty tough quarter on the top line.
Definitely sounds like it. Any other key financials from the quarter?
Yeah, digging a bit deeper.
Yeah.
Gross profit stood at $2.4 million. That reflects a gross margin of roughly 15%. And adjusted EBITDA came in at negative $3.5 million. So operationally, pressure there.
Right.
However, and this is where it gets interesting, when you look at their balance sheet, as of August 13th, there's this robust liquidity position.
Oh, what does that look like?
Approximately $99 million combined. That's in Ethereum, NFTs, and cash.
$99 million liquid against how much debt? That's the thing. Total debt is just $1.25 million. So a tiny amount of debt relative to that liquidity.
Okay, so that liquid asset base, what does that break down to per share?
It actually equates to roughly $1 per share, which is, a fascinating point of contrast given the operational misses we just talked about.
Absolutely. So you've got these significant operational misses, revenue down, missing estimates, yet a balance sheet just brimming with liquid assets worth about $1 per share.
Precisely.
So the immediate market sentiment after these results, I imagine it wasn't great.
No, as you might expect, it was one of pronounced skepticism, clearly reflected concerns about that revenue shortfall, and crucially, how they're going to execute this, rather unconventional forward-looking strategy.
Yeah, that makes sense. Which brings us right to the core of their narrative. Management kept using the word transformative for 2025.
They really leaned into that.
How do they square that optimism with such a tough Q2? And what's actually driving this ambition?
Well, the CEO emphasized 2025 as this transformative year. They're driving what they describe as a digital-first platform, spanning media, tech, esports, and, the big one, on-chain finance.
Okay.
Their belief, or at least their stated belief, is that this unique model, blending a traditional operating business, even if it's underperforming right now, with this large-scale, actively managed Ethereum Treasury, that's what sets GameSquare apart.
So it's a dual strategy, really. Trying to fix the operational engine while running what sounds almost like a crypto fund alongside it.
That's a good way to put it. They're essentially betting on both parts working together somehow.
That's where it gets really interesting, right? This Ethereum Treasury strategy, they officially launched it July 1st.
Yep, July 1st. Funded by a gross raise of about $90 million.
$90 million. That's a huge sum, especially given their current revenue. What's the plan? What are they actually doing with all that crypto?
Yeah, it's definitely the cornerstone of their new vision. And it's not just sitting there. As of August 13th, they said the Treasury had already generated over $19 million in unrealized gains.
Unrealized. Okay. How much ETH are they holding?
They were holding 15,630 ETH with a market value at that time of $74.3 million.
And the strategy isn't just holding, they're aiming for yield.
Exactly. The core aim for the Ethereum holdings is to generate annualized yields of 8% to 14%. And this isn't passive HA dealing, it's actively managed. They have an exclusive partnership with Dialectic, which is a specialized crypto asset management firm.
Okay, 8 to 14% on the ETH. What about the NFTs? I saw they bought a pricey CryptoPunk. How does an NFT generate yield?
Right, that's the other piece, the NFT yield strategy. It focuses on what they call culturally significant digital assets, like that ape CryptoPunk they bought for $5.15 million.
So how do you get yield from a JPEG, essentially?
Yeah. Well, it's not just sitting in a digital wallet. The strategy involves things like lending the NFT out, potentially using it as collateral in DeFi protocols, or participating in various Web3 initiatives that might offer rewards. The goal is to earn a consistent income, often in stablecoins, without actually selling the asset.
Gotcha. And what kind of yield are they targeting there?
For the NFT strategy, they're targeting 6% to 10% annualized stablecoin yields.
Okay, so 8-14% on ETH, 6-10% on NFTs. Let's connect the dots here. What does this big move into crypto assets and yield generation actually mean for the company's future? What's the end game?
That's the critical question, isn't it? Management says the purpose is multifaceted.
Like what?
Strengthening liquidity, obviously. Funding growth initiatives for the operating business, that's key.
Huh?
Enabling opportunistic share buybacks. They already approved a $5 million program. And basically reinvesting back into their core operations. They talk about creating this self-reinforcing cycle of growth. The crypto side fuels the operating business, and maybe the operating business generates opportunities for the crypto side. That's the vision.
A self-reinforcing cycle. But connecting it back, you have to ask, is this really a synergistic growth engine, or is it more like financial engineering? A lifeline to fund a turnaround for an operating business that's clearly facing some headwinds.
That's exactly the tension here. It's definitely a high-stakes bet on this crypto flywheel, hoping it can compensate for those operational challenges. A very ambitious narrative.
It certainly is. Okay, beyond this bold crypto venture, we also saw some pretty significant operational shifts, cost savings during the quarter. Can you walk us through those? Were they enough to, move the needle on the core business side?
Yeah, definitely some movement there. Operationally, they divested their remaining stake in Phase Media back on April 1st.
Right, Phase.
The idea there was simplifying the business, reducing working capital needs. Seems like a move to streamline and focus resources.
Makes sense. And cost savings.
On the cost side, they identified an additional $5 million in annualized operating expense savings. They expect that to start contributing in Q3.
Okay, $5 million more. Where is that coming from mostly?
Primarily from consolidating technology platforms, aiming for more efficiency. And this is on top of already reducing SG&A selling, general, and administrative costs by 15%. So there's definitely a focus on trimming fat.
Okay, so streamlining, cost-cutting, positive steps. But let's circle back to that Q2 revenue miss. It was pretty big. What reasons did management give? How much felt like internal issues versus external factors?
They laid out three main factors. First, extended closing timelines. These were for multi-year, seven-figure deals, mostly with large global gaming companies.
Wow, delays. Any reason given?
Particularly those headquartered in China. They pointed to the impact of tariffs and just general macroeconomic uncertainty, making those big commitments harder to finalize quickly.
Okay, so external headwinds. What else?
Second, a deliberate reduction in low-margin programmatic advertising revenue, the automated ad buying, often lower profit. They say they're actively shifting focus to higher-margin stuff.
Right. Prioritizing profitability over just volume. Makes sense strategically, but hurts the top line short term.
Exactly. And third, that strategic pivot towards the crypto space. They said it meant some opportunities were still kind of in the pipeline rather than actually landing in Q2.
So summing it up, they're framing it mostly as timing issues, strategic shifts, external factors. Less about a fundamental lack of demand or, say, internal execution problems.
That's the picture they painted, yes. That it's not a demand issue, it's about timing and strategic reprioritization.
Okay, so despite these challenges, the revenue miss. What operational progress or new partnerships did they highlight? What gives them confidence looking ahead?
They did point to several key wins, which show there's still underlying strength. Stream Hatchet, for instance, that's a key tech asset for them.
Right, the data platform.
It signed its largest contract ever, supporting the launch of Monster Hunter Wilds. Also got a new managed services agreement with Ubisoft for Rainbow Six Siege.
Okay, good wins.
And Stream Hatchet seems to be evolving, becoming more like a full-service marketing engine. They even launched an AI tool for connecting brands with Gen Z and millennial audiences.
Interesting. Any other highlights?
GameSquare Experiences launched a collegiate esports program, produced the 100 Thieves Summer Block Party successfully, and importantly, tying back to the crypto strategy, they're actively pursuing opportunities with over 15 crypto-native organizations. They expect initial wins in Q3 and Q4.
Any examples?
Yeah, they gave a prime example, a $2.5 million agency of record win with Isuki, apparently a rapidly emerging Web3 gaming platform. They stressed this is a high-margin deal expected to contribute in Q3 and Q4, underscores that pivot.
Okay, those are some tangible wins, especially the Isuki deal, tying the operating side to the crypto focus. Looking forward then, what's their outlook? What guidance did they give for the coming quarters, especially after such a shaky Q2? Are they still talking profitability?
They are. GameSquare is targeting profitability in Q3 2025.
Q3. Okay, that's ambitious.
It is. They anticipate meaningful sequential growth in revenue, expecting Q3 to be higher than Q2 and then Q4 building further on that.
So a strong second half is baked into their forecast.
Very much so. Approximately 60% of their 2025 core revenue is expected in the second half. They say this aligns with typical seasonal trends in the gaming industry.
And are they putting out full-year guidance again?
They plan to reintroduce full-year guidance during the Q3 update. They express confidence, citing the combination of, the operating platform improvements that shift to a more profitable revenue mix, ongoing cost control, and of course the expected boost from the on-chain Treasury strategy.
Right, the whole package coming together in the back half. So management's clearly optimistic, projecting a significant turnaround. But the market reacted with, as you said, pronounced skepticism.
Yeah, that stock drop post-call tells the story.
Which brings us back to that core challenge for GameSquare.
Yeah.
How do they bridge this perception gap with investors? How do they convince the market?
That's the million-dollar question, or maybe the $99 million question given their treasury. The market reaction signals substantial doubt. While management is bullish on the second half and this unique operating business plus crypto treasury model, investors seem to be weighing that big Q2 revenue miss very heavily against those future promises.
So it's performance versus promise right now.
Exactly. This contrast highlights their core challenge. They need to shift the narrative, move away from what some might see as financial engineering plus promise, leveraging big cash pile and hoped for crypto gains, towards demonstrating a genuinely scalable platform with improving unit economics.
They need to prove the core business works on its own, and the crypto isn't just papering over cracks.
Precisely. They need to show the core business can stand on its own 2 feet and that the crypto treasury is truly additive, truly synergistic, not just a Band-Aid or a distraction.
That's really the crux of it. So, looking ahead, what are the key catalysts? What should investors be watching for in the next few quarters to see if GameSquare can actually validate this strategy and maybe turn that market perception around? What makes people believe?
Okay, key catalyst to watch. Definitely the Q3 earnings print. That's huge. And the reinstatement of full-year guidance that comes with it.
See if the numbers back up the talk.
Absolutely. Then, tangible evidence hard numbers showing high-margin on-chain yield contribution from both the Ethereum and the NFT strategies. They need to show those promised 8-14% and 6-10% returns are actually materializing.
Proof points on the crypto side. What about the core business?
Critical there, too. Successful closure of those delayed Q2 deals they talked about. And winning additional managed services contracts, especially high-margin ones like Isuki, show the operating engine is firing again.
Makes sense. Anything external?
Well, continued sector tailwinds wouldn't hurt. They mentioned that 5% year-over-year increase in gaming and streaming hours in Q2. A rising tide helps, but ultimately it boils down to execution. A beat and raise quarter in Q3, beating expectations and raising guidance, demonstrating both operating leverage and concrete yield income from the Treasury. That's what would likely be crucial to shift market perception and really validate this ambitious strategy. That's what makes the market sit up and take notice.
A Q3 beat and raise. That feels like the key test. All right, let's shift gears slightly. It's time for our valuation anomaly deep dive segment.
Yeah.
This is where we explore those, let's call them outrageous but plausible market disconnects you might hear kicked around, maybe in a hedge fund meeting. Purely a thought experiment, of course.
Right, strictly hypothetical. And definitely not financial advice.
Absolutely not financial advice. So considering GameSquare's situation trading well below its stated cash and crypto value per share, while the operating business is trying to turn things around, so what's a potential angle here?
Okay, here's a thought experiment. You could analyze a hypothetical long position in the stock, ticker GAME. The bet isn't necessarily on the operating business suddenly crushing it. Instead, it's a bet that the market eventually prices the company at least at its net asset value.
The NAV play, based on the cash and crypto.
Exactly. As we said, as of August 13th, that was around $1 per share in combined ETH, NFTs, and cash. Compare that to its recent trading price, which was closer to, say, $0.77.
Okay, so there's a gap. What makes this outrageous but plausible?
Well, the outrageous part is you're essentially betting purely on the market, correcting what looks like a glaring valuation anomaly, almost irrespective of the near-term operational struggles. You're ignoring the P&L noise for a moment.
And the plausible part?
The plausible part is that this kind of disconnect, where liquid assets per share significantly exceed the stock price, especially net of debt, often attracts attention, maybe from activist investors. Or it could lead to a significant re-rating if that Treasury strategy actually delivers those yields, or even if the company gets more aggressive with capital allocation, like using that buyback program more forcefully to close the gap.
So the thesis isn't Q3 operations will be amazing, but more the market have to recognize this underlying asset value eventually.
Pretty much. It's a bet on the balance sheet value being realized, perhaps driven by the yield generation, maybe by activism, maybe just by market efficiency catching up. Less about immediate operational perfection, more about the sum of the parts, especially that big liquid part.
Interesting angle. A bet on the assets, not necessarily the immediate turnaround story.
Again, just a thought experiment on market disconnects.
Understood. So, wrapping this up, GameSquare Holdings is clearly at a pivotal moment, really pushing forward with this bold strategic transformation driven by the new Ethereum Treasury and that refined focus on higher margin operating segments.
Definitely a company in transition. High stakes.
And while that Q2 revenue miss definitely casts a shadow of skepticism, you have management remaining remarkably confident about a stronger second half. They're banking on sequential growth, those cost savings kicking in, and crucially, the contributions from their on-chain yield strategies.
Yeah, they're projecting a significant improvement.
So the coming quarters, particularly Q3, will be a real test of their ability to execute. Can they convert this ambitious vision into tangible financial results? Can they actually turn that crypto treasury into a growth engine for the core business?
And can they bridge that gap between their promises and the market's current perception? Those are the big questions.
Absolutely. We really encourage you to dig into the details yourself, look at the numbers, listen to the call if you can, and form your own conclusions. Can GameSquare actually bridge that gap between its ambitious plans and current market expectations?
Lots to mull over there.
Indeed. This has been The Deep Dive. Thanks for joining us for this exploration of GameSquare's journey.
Thanks for tuning in.